Morgan Stanley just dropped a report saying Bitcoin is now large enough to be considered a national strategic reserve asset. But what they didn't say might be more important than what they did, because as the world scrambles to find a new global settlement layer, one question now sits at the center of it all. Which asset gives the United States the upper hand, gold or Bitcoin? And if the answer is already obvious to Wall Street, how long until the world catches on? Today, we're looking beneath the headlines, at the incentives shaping this shift, the capital moving behind the scenes, and why Bitcoin's next chapter may be written not by speculation, but by game theory. With the constant barrage of positive Bitcoin news as of late, it's easy to forget just how quickly the conversation around Bitcoin has changed in the last few years. What was once seen as a speculative curiosity is now being seriously discussed in high-level economic reports. The most recent one came out this month from Morgan Stanley. In the report, Morgan Stanley said Bitcoin now has the market cap necessary to qualify as a strategic reserve asset. Not someday, now. But they also said it's still too volatile for that role today. And that's where the tension begins. Because as this chart shows, Bitcoin's volatility is decreasing. Slowly but steadily. And the moment it drops low enough to meet their own criteria, the price will certainly be far higher than it is now. Morgan Stanley even modeled out what a proportional global reserve allocation would look like, and that's roughly $370 billion allocated to Bitcoin. That's somewhere between 12 and 17% of the total supply. If that happens, this asset becomes fundamentally repriced overnight. The fact that Morgan Stanley is even discussing this confirms just how far the Overton window has shifted on Bitcoin. But the really interesting part isn't what Morgan Stanley said, it's what they didn't say. Because if the world does move towards a neutral reserve asset to store wealth and settle trade, the question becomes, which one gives the United States the upper hand? More on that in a few minutes. First, let's pull back and look at the big picture. Now, the following analysis and charts are from Jesse Myers, or @Croesus_BTC on X, so give him a follow. In 2023, global assets were estimated at around $900 trillion. Today, that number has crossed 1,000 trillion, or $1 quadrillion. On the surface, it might look like the world is getting richer, but that's of course deceiving. Over the same 2-year period, the global M2 money supply, the broadest measure of liquidity, grew by nearly 5% annually. In other words, a big chunk of that asset growth is just fiat dilution. When you adjust for this debasement, only a few asset classes have truly gained ground. Hard assets like Bitcoin and gold have increased their share of the global asset pie. Fiat-based assets such as bonds, cash, and money market instruments are quietly losing ground. And within that rebalancing, Bitcoin has stood out as the top performer. It's grown by 323% over the last 2 years, far faster than any other major asset class. Michael Saylor has famously projected Bitcoin could move from just 0.2% of the global asset pie to as much as 7% over the next 2 decades. That would mean Bitcoin rising from just under $100,000 today to over $13 million per coin by 2045. And according to updated tracking, that growth trajectory is surprisingly right on schedule. Meanwhile, the plan for national Bitcoin accumulation is already underway. The Trump administration has signed the bill creating the U.S. Strategic Bitcoin Reserve and have consistently said they plan on becoming the Bitcoin superpower of the world. They have proposed accumulating Bitcoin using creative budget-neutral strategies like tariffs, gold revaluation, or seigniorage mechanisms, all viable without raising taxes or expanding deficits. The thinking is clear. If Bitcoin is emerging as a new monetary base layer, and if the US already has a lead in exposure, then formalizing the lead is a national advantage. In other words, if you can't stop the shift, you lean into it. This brings us to an important point made recently by Matthew Pines from the Bitcoin Policy Institute. Here's how he describes the strategic asymmetry between Bitcoin and gold in the context of US interests.
Clearly, Bitcoin is now becoming a geopolitically relevant asset. How it interplays in this dynamic of global fragmentation, I could see it playing a role of if the US creates this system, a more enforced treasury dollar standard in the West, and gold kind of becomes this settlement asset intermediating trade between East and West. Bitcoin, I think, can play a much more effective role in that system because it's very hard to actually settle trade with gold without it being centralized and having these other counterparty risks, which is very expensive. And so it's like a 19th century style asset. It doesn't really quite work for a 21st century economy that will still have global trade. We're not going to go to complete isolated blocks. I don't think we're going to completely decouple. So I think Bitcoin can evolve, and it could happen quickly in the next few years, into a role where it's taking some meaningful share from gold.
You've spoken a lot about the incentives for the US to adopt Bitcoin as opposed to gold. That's very strong because of the amount of Bitcoin domiciled in the US with US companies, ETFs. Do you want to just explain that?
If you run the numbers, and these are guesstimates, is if you add up the total amount of gold reserves in the US, the amount of gold held in gold ETFs, and then individual holdings of gold jewelry that's used as a store of value, we have maybe 8 to 10% of the total above ground stock of gold. If you do the same analysis for Bitcoin, and it's tough, you have to do a bunch of heuristics, but roughly say 35 to 40% of the total current available Bitcoin supply is owned by Americans or the American government or American ETFs or American companies like MicroStrategy. So 35% versus 8 to 10%. So if you imagine a scenario where both these sort of neutral reserve hard assets start to become monetized in the global system, it's clear to me that we stand to gain disproportionately if Bitcoin succeeds relative to gold.
Now, what Matthew lays out here is crucial. This isn't just about which assets work better on paper. It's about which assets align with national interests. If both gold and Bitcoin are being monetized as neutral settlement assets, then the US has every incentive to support the one where it holds the dominant position. Gold requires storage, verification, shipping, and trust. It was built for a different era. Bitcoin settles instantly, scales digitally, and can be verified by anyone in the world without asking permission. And it's not just about tech. Annual supply growth of fiat currency is roughly 14% globally. The US dollar supply increases by about 7.4% per year. Gold inflates by about 1.5 to 2% per year, and with rising prices, that rate may increase as more mining becomes economically viable. Bitcoin is the outlier here, with its supply now only increasing today by 0.84% annually and decreasing exponentially after every 4-year halving event. So in summary, fiat supply doubles every 5 to 10 years, gold every 36 to 48 years. Bitcoin? It will only increase less than 6% for the rest of time. That's why investors are beginning to reposition. As Bloomberg ETF analyst Eric Balchunas pointed out in an X post this morning, IBIT, BlackRock's Bitcoin ETF, took in another $500 million yesterday, extending its inflow streak to 15 days, and is now 6th in year-to-date flows, passing GLD, the spot gold ETF, which is notable because IBIT is only up 4% versus gold having the run of its life. To take in more cash in that scenario is a really good sign for the long term, and inspires confidence in our call that Bitcoin ETFs will have triple gold's assets under management in 3 to 5 years. It's becoming more and more clear that conviction is shifting, and not just among retail investors, but deep inside institutional capital. More and more investors are looking at Bitcoin as the future base layer, not just an asset to own, but a protocol to build on. And if you want to be more than just a spectator in this next era, if you want a seat at the table shaping how Bitcoin fits into our financial future, there's one place to be. This September, join us in Washington, D.C. for BTC in D.C., the first major U.S. policy forum dedicated to Bitcoin. Swan is proud to partner with George Washington University and BTC Prague to bring together leaders like Michael Saylor, Adam Back, and many more, where Bitcoin meets monetary policy, global finance, and the next chapter of adoption. Our Swan private team will be there, and we're excited to welcome clients and allies to the front lines of this conversation. So get your tickets at btcndc.com and be a part of the movement ushering in the Bitcoin era. And a quick shout out to Mara, the largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So when Morgan Stanley says Bitcoin isn't ready to be a reserve asset, they're only looking at volatility. They're missing the forest for the trees. What they're missing is the alignment of incentives, game theory. And right now, Bitcoin is the only neutral settlement asset that aligns with US strategic interests, investor demand, and the macro direction of the world. That's the signal. Here's a fun headline I came across for you. French farmer discovers gold mine worth 4 billion euros in his garden, but the state confiscates it from him. One story, 2 lessons. Can you spot the 2 lessons here? First lesson, gold is still being found. Its supply keeps growing. That means dilution. And second lesson, gold is physical. That means it can be seized by force or by law. Bitcoin doesn't have either problem. Its supply is finite, and if you hold your own keys, no one can take it from you. Different asset, different game. So what happens when an asset that no one controls becomes the thing everyone needs? Do you think the US will realize that they benefit the most from adopting Bitcoin as a global settlement layer? I'd love to hear your thoughts on this, so drop them in the comments below, like this video, share it with friends, and subscribe to the channel. And as always, stay humble, keep stacking, and pay attention to where the incentives lie when the system resets. Thanks for watching, and remember, TikTok next block.